I wanted to do today is just talk fairly briefly about the election and the impact that it's had on my stocks, and I cover the casinos, otherwise known as gaming, lodging, and cruise lines, basically all of leisure land, if you will. And clearly we've had a big impact on our stocks, a lot of speculation on the fundamentals. I want to talk about whether the fundamentals have kept up with the stocks and what we think we'll see here in 2017 from more of a top-down perspective. Clearly my stocks are very economically sensitive, right? So if you believe that the Trump administration is going to do a good job for the economy, my stocks will probably do well. And I think Hedgeye is fairly bullish on the U.S. economy. That should bode well for most of our stocks. The one exception would be the Macau stocks, which, by definition, have most of their exposure in Macau, and actually could be somewhat negatively impacted if there are some strains between the U.S. and China relations, right? So let me just kick off with the gaming side here, the casino side. What we've seen since the election, we've seen Macau stocks really kind of actually went up after the election, but then sharp deterioration in the stocks. And this had nothing to do with the election. This was primarily due to some increased regulations in Macau. So very Macau specific, not related to the U.S. There is a concern in the Chinese government about capital flight out of China. So there were some restrictions put into place. Now the harder or the more difficult it is to pull money out of China to gamble in Macau, the less gambling dollars are available. So that was a real regulatory risk that was presented, and I think the stocks acted appropriately. Most of those companies, and these are the companies I'm referring to, would be LVS, Wynn, MGM to a much lesser extent, MPEL, traded on the U.S. stock exchange, but most, with the exception of MGM, most, if not all of their exposure in Macau. So that's a complete separate animal. Now we move to the domestic stocks, which we bifurcate into the regional stocks. This would be more local type gaming casinos versus Las Vegas Strip. So you're basically talking about MGM on the one hand with the Strip, and then you're talking about Penn, El Dorado, Pinnacle, Boyd Gaming, and Red Rock Resorts that are exposed to the regional markets. Now these guys are direct beneficiaries of a couple things that could come out of the Trump administration. One is corporate tax reform. They generally, most of them have NOLs, but ultimately they are U.S. taxpayers and would benefit from any kind of corporate tax reform. Additionally, very susceptible to local economies, unemployment rate, housing prices, GDP. So to the extent that Trump is successful in growing jobs, creating growth, pushing GDP up from that kind of 2% level we've seen for a while up to that 3%, this would be very good for the gaming stock. So they did act appropriately, we think. Now, what have we seen so far? Well, we saw a pretty good November. And I think there was a lot of consumer confidence there. And when I say a pretty good November, relative to what it should have been, better than what we had seen in the trend. Not quite up year over year, but better than the trend. And if you go to the next slide here, we have a little bit of a map. And this makes sense if you just look from a pure consumer confidence level that the numbers should get better. If you look at the states where we see the regional gaming operations, mostly in the Midwest and the South, most of them are Trump states, and many of them actually converted from Obama in 2012 to Trump in 2016. So certainly a bigger level of confidence. Now I will say that December was a little bit disappointing. So it's really a mixed picture on what's going on with the fundamentals in regional gaming. We're hearing anecdotally that things on a sequential basis are a little bit better here in January. We do worry about regional gaming revenues overall, and it's not because of the macro, it's more the demographic side of the picture, because basically young people don't play slot machines. Yeah. You've got baby boomers up here, they play slots. Generation X, which is my generation, we were the first video game generation, we're really not interested in slots. I mean, they're just not entertaining relative to the video games that we are grown up on. And then millennials like you, Ben, there's no way you guys are playing slots, right? So that's
online poker,
right? Online poker, a little bit, but they can't make much money off of that.
Yeah.
So demographically speaking, which demographics usually outweigh the macro over the long term, That's a big headwind. But macro can take over for a short period of time. So there is the potential for that happening in 2017. If gas prices don't skyrocket and unemployment goes down and jobs are created and GDP goes up and housing prices, which is a real big one for gaming revenues, housing prices go up. So it should be interesting to see that play out.